US mortgage interest rates is increasing by the week. But why? And what is going to happen with mortgage interest rates, especially if you are an expat trying to buy property in the United States? Check out this video as John Brock-Edgar talks about the mortgage interest rates and how it might affect you. All right, so this time around, we're going to be talking about mortgage interest rates. And across the board in the UK and in the United States, we are seeing an increase in mortgage interest rates. And there's no better person to talk about this graph than John, who's a mortgage broker. So you've been helping Brits as well as Americans buy property in the States. That green line, which is one that we're going to be focusing, is the national average. Which is crazily big. You mentioned 5.2% before we started the show. Obviously, for an expat like myself who's looking to buy a property in the United States, we're talking about an interest rate of what nowadays?
Well, for a foreign investor looking to buy a property in the US, you're looking at probably something in the region of 7.5 to 7.75%. That's a huge increase compared with just 6 months ago, where we were looking at kind of 5 to 5.5% as a foreign investor buying a property in Florida, for example. So we're looking at an increases of rates of 1.5% just over a 4 to 6 month period. So rates currently with a 30% down payment, you're looking at around about 7 to 7.25%.
Right, and coupled with the fact that we've got increasing interest rates, but if we're talking about Florida, in particular Orlando, where you guys work, the house prices are going crazy. They're increasing. So not only have you got an increase in mortgage interest rates, but Lionel, we've also got an increasing house price as well, haven't we?
We do, and we're talking about 20% year on year, 21%, almost 40% in 2.5 years. So prices have gone through the roof, driven largely by cash, not by mortgages. But we've also seen rents increasing by similar percentages. So it's not like the yields have gone down. If you're looking at an investment property, then investments are still, housing is still a very, very good investment in terms of return. It hasn't diminished simply because house prices have gone up. And the fact that people can't get on the ladder here is that they have to turn to rent. So that's good for landlords, bad for people wanting to buy, but that's why rents have been driven up as well. So I don't think simply because mortgage rates are at now over 5% domestically, that's going to necessarily massively slow down the housing market. I think if it goes up another couple of percent, then we might be in that territory. But doing the numbers, if you've got for every $100,000 loan you've got, the 1% makes about a $30 difference, John, right?
Yeah, about that.
So if you're looking at putting 30% down on a $400,000 house, you're going to be left with a round number, $300,000. It's $90 a month.
Mm-hmm.
So let's just put it in context. $90 a month. Is that going to kill you? Is that going to send you over the edge? If it is, do not buy. If it isn't, then because we don't want people to buy a house from the UK, say 3,000 miles away, and then not be able to sleep at night. That's not the business that we're in. We want people to understand what they're getting into. This is a huge undertaking. Mm-hmm. So whether you're paying 2%, 5%, or 7%, you've still got to be comfortable in the monthly outgoings that you're gonna have. Mm-hmm. That's why we take a lot of time to educate people on what they're getting into and the potential returns and expenditures. So it's not just, you can let your house out 80% of the time. We never say that anyway. But we simply want people to be educated as to where the market is today, both in terms of the price of the house that they're buying, the potential returns on rental, and how mortgages play into that.
Yeah. John, from your perspective, why has mortgage interest rates shot up so significantly from the 5% that you mentioned earlier towards a 6% margin that we're now getting towards? What's the reason for that? And
well, I think domestically it's it's to do with inflation, the Fed's response to inflation. Are the main drivers of those interest rates. The marketplace for the secondary loans, which essentially foreign national mortgages are driven by groups of investors, and obviously it's more expensive for them to borrow money to lend to the foreign nationals because it's a bespoke marketplace. And the margins are bigger, so therefore you see the interest rates going up by a bigger percentage margin than the domestic rates, and that's pretty much it in a nutshell.
Okay, and what's your advice for Lionel and John for that matter? But if people are worried about these prices, but they're looking for investments. Lionel, you mentioned already, if you can still come over here into Orlando, buying a property as an investor from the UK, still a good bet?
Yeah, I mean, look, not every home on the market is going to be a good investment bet, and that's the same for everywhere in the world. We do help people in understanding where to buy, which communities are the better ones, at every price point. But then, when people are looking at individual homes, we will look at the history with them. We will look at the history of expenditure and income. So does it actually make financial sense to do that? I mean, if you're reliant on income to pay your way, still, I'd be very wary of jumping into buying an investment property in the US. COVID meant that some people had to sell it because they didn't have enough money coming in to pay their outgoings. Not many. It's a fraction of a percent. Foreclosures are a fraction of a percent. And, thankfully, with a rising market, you're not underwater on your mortgage if you've got a mortgage. So if you had to sell, you could comfortably get out of the position you're in.
But I also think that you need to go into this like any other investment. And the length of term mentally that you have for that investment needs to be medium to long term. All right. Because if you're looking at short-term fluctuations, we've just seen how quickly interest rates can go up, right? Inflationary pressures, what that's done to interest rates over a relatively short space of time. If you're coming into this marketplace to buy a property and your intention is to make a quick buck and sell it in a year or two, my advice would be don't do that. You've got to look at this as a longer term investment. Because there is a lot of volatility in that market at the moment, like there is in the stock market. And I would never recommend anybody to go into the stock market under the same premise of wanting to turn a quick buck. So I think the length of term that you want to invest for and having the ability to pay mortgages over a longer period of time would make more sense than coming in, and the red flags would come out for me if I were to find out that a client was in the marketplace to make a quick buck over a year or two.
100%. If you look at the long term, it's usually 4 or 5% gain per year long term. Mm-hmm. This 20% per year simply is not sustainable and will not continue. Let's be frank.
Yeah.
Will not continue. If you were lucky enough, or not lucky, but you did the numbers and somehow you thought this is going to be a great place to invest, over the past couple of years, you've made an absolute killing. But it can't continue like this.
Mm-hmm.
Yeah.
Perfect. Thank you, guys. What a great update that was. Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.